G'day all. I'm going to talk about today high PE stocks and why you shouldn't be afraid of a high PE stock. In fact, you should be excited. Now, I'm not saying all high PE stocks are good buys, but what I'm saying is when you see a high PE stock, you have to ask the question, why? I mean, why is the market prepared to pay so much more for this stock compared to its profit, compared to the stock next to it? Now, I'm going to give you an example. Now, this is like a perfect world example, but it could work. It could work similar to this. So just take it into consideration of why people do pay, 50, 60, 100 PE when they're buying a share. Now, this is an example. The market cap of the company is 500 million, 50 million shares, $10 a share. Okay, so now we're going to project out into the future. Now, there's a lot of guesswork when you do this. I mean, and that's why some people will agree and disagree. That's how markets work. So you are putting in a bit of guesswork to try and get to the final figure. But let's just assume, now we know the 2017 revenue was $100 million for this company, and they made a net profit of $10 million. So now how I work out PEs and how you should work out PEs is you divide the market cap by the net profit after tax. So this has got a market cap of 50, which you say, well, that's too high. But let's just assume you've done your research, you've read about this company, and you think that the revenue is going to grow by 50% over the next 5 years. So let's extrapolate that out with revenue growing so quickly, and this can happen. So revenue in 2007 is 100 million, 150 million, 225 million, 337, 506 million in 4 years' time. So do you think if the revenue grows at 5 times, and let's assume that the net profit also grows at the same rate, do you think that the market is going to allow a company like this to be at a PE of 10? I mean, of course it's not. It's still going to be at if it's showing this sort of growth, it's still going to have a high PE of maybe 50, maybe 40. But you can guarantee that share price has gone up, 5, 10 times over that 4-year period. And one other thing with these sorts of companies, that they've got a net profit of 10 million here, which is 10% of their revenue. Over time, they will put the infrastructure in, get the right people in place, and this profit here from their revenue may be 20-25% of their revenue. So this 50 million may be 100 or 125 million. Now, do you think the market is going to let a company like this have a PE of 4 or 5? I mean, of course not. So this potentially could be a 10 bagger, and you think, well, it's got a 50 PE. I mean, how could it be a 10 bagger? Well, it can be. It can be. So this is what share trading is about, and investing. You've got to be able to look into the future. So don't just disregard these companies because they've got a high PE. Ask why and research and do your homework on them and see if you can find one of these 10 baggers, because they're fantastic.